Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, as we take a look at the market, somewhat sideways for the S&P. Dow actually eked out positive gains, but you can see a little bit of selling coming into the Nasdaq and the Russell. In fact, the Nasdaq pulled back into a pretty critical support zone. We were able to defend it successfully. We'll see all of that on the charts. But also on the crude, we got the crude up and over the 52s. We actually got much higher, almost up to the 54.50s earlier today. I think a lot of people were watching that. Russia actually cut back on production, popping the crude up here Sunday evening. But as we continued the trading, we saw that fade down. We closed down here up at 52.44. We had the bonds and the gold also kind of bottoming out at this point. So we'll see all of this on the charts. But as always, we're going over to the S&P 500 dailies. So folks, we've had the first red day in 6 trading days. So over the last 6 trading days, they've all been positive here. We put in our first red day on the S&P 500, and it's not a huge red day. We're down about 0.12% on the day, so just fractionally down. Volume did expand just a little bit, although this is not a distribution day. If you recall, we need to have at least a 0.2% down day on volume heavier than the prior day. So right now we're escaping any sort of institutional signs of selling, but that's not the case here for the Nasdaq. That is the one that has seen more selling here over the last couple of days. But folks, S&P 500s, just watching this as we're into new all-time highs, really the only thing we can look to here is a support or a defense of the S&P right at these 2214s, 2215s. That's that prior area, that little high handle that we broke out of right here, right? So here's those 2214s right in this area. So if we do somewhat pull back over the next few days, what you'd ideally like to see here is the Nasdaq catch a little, or I should say the S&Ps catch a little support right in around that prior resistance points, which should now act as a bit of support on the way back down. Now, as we take a look at the Nasdaq here, folks, the Nasdaq, while it was down 0.6% on the day, the volume was slightly less than Friday's volume, which helped the distribution day to be escaped here on the Nasdaq. One thing I did notice on the Nasdaq, though, remember how we were talking about the 5340s or 5350s region? When we finally broke out of it here, and then 3 or 4 days later we rolled back under it, we started to say, hey, watch out, because that's atypical for a breakout. You don't want it to come back underneath the breakout zone. You want it to hang out and test right at those prior support levels and then rally up and make a new leg higher. So that tends to feel a little bit weak. Well, folks, that's the same situation we're in right now. Is we're kind of right on these 5400s, right at this whole number, and that 5400s prior resistance zone, I should say, and has now been broken out as of last Thursday. So even if you zoom into the 60-minute charts here, ladies and gentlemen, what you'll see here is those 5403s. Right there. You can see that we actually tested it 2 times here, once on Thursday and once on Monday. Those 5400s have been supporting so far. However, if you do start to see trade underneath these levels, it could be that you're in for a little bit more of a pullback on the Nasdaq. Again, prior support, I should say prior resistance, should now act as support, and when it doesn't, it generally tends to feel like the breakout might be a little lacking in conviction or in volume. One thing I did want to mention about the market environment on Monday is that we had a lot of stocks stop us out. Now, they stopped us out at a profit, but one thing that we noticed is we went from almost 6 swing trade positions all the way down to 1. And I think that should just kind of go to show what the situation or the health of the market is at this point. It could just be we're needing a little bit of a break, a little bit of a breather. And in fact, one of the things I pointed to on Friday's analysis is how a lot of our stocks put in like these stalling or reversal days. They ran up higher, triggered our sell stops or profit targets on Friday, and then came all the way down, closed at the lows. And part of the reason that we sell so soon is because, folks, once you get undercut some of these lows here, that's when you can really have a pretty quick and fast sell-off, as you can see here in this NXST. This is part of the reason why we look for these reversal days to the downside, because typically they point to further downside over the next day or two of trading. Another one was this TSEM. We saw a little bit of that stalling action on Friday, right? And then today gapped down, went lower. Another stock that did that as well was this FOE. This was another swing trade that we had, right? We took this at right as it was breaking out here. We got our profit targets filled Friday, kind of put in a little bit of that reversal. Boom, just kind of kicks you out the next day. So that's why we watch for the reversals, kind of a little bit of a tell that there's something wrong with the buyers. There just weren't any additional buyers into the new high ground market, or I should say the stock price settles back in. So that's just one of the things to note here. A lot of our positions just stopping us out. We locked down some great profits that we've had. Some of our swing trades were now 12 days in the making. So we definitely locked them down. We took our profits, and now we're just waiting to redeploy capital, waiting for new bases to set up, high handles or even cup and handles, flat bases maybe. We're going to be watching the charts to see what forms up over the next few days or maybe even weeks. Also keep in mind that on Wednesday we've got the FOMC rate announcement coming up, which is probably going to impact your charts in terms of the bonds. But other than that, wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.